Good afternoon, everyone, and welcome to the Fiscal Philosophy YouTube channel. Rumors of my death have been extremely exaggerated. I haven't been able to post videos lately because, well, I have been quite ill and my voice hasn't really been up to it, but I'm beginning to feel better day by day, and I wanted to bring your attention to a stock that I recently purchased shares of and give you a little insight into why I'm doing so. The company is Grab Holdings Limited. Grab has this app which is called Grab, and it's essentially a Uber based in Asia. Essentially, unlike Uber though, they consolidate all of the uh, ride sharing and the food delivery, etc., all in one convenient application. I've used it multiple times on trips I've made to Metro Manila in the Philippines, and it's definitely a really good app. The share price for Grab is down considerably from its highs, uh, in excess of 70%, but I believe at this point in time, it does begin to represent a possible value opportunity, and this is still a growth business. I think that a lot of people probably got in a little bit too early, thinking that this was just going to be, a vertical line up, Uber 2.0, etc. And I think it has potential, but let's take a look. So their revenue does continue to rise quarterly, although it is slowing down a little bit from the beginning. I think this is pretty normal growth trajectory. Grab has seen extremely wide adoption in the markets that it's in. In Metro Manila, there's Grab drivers everywhere. So that is only a part of the story, though. Although you may say, well, it's slowing down because it's already pretty widely adopted. That may be true, but the average person in the market served by Grab, they don't have the most disposable income at the moment. And I think as that increases, we will see the revenue maybe begin to accelerate further into the future, as well as, hey, who's to say they may not enter other potential markets and even directly compete with Uber at some point. At the moment, I believe the markets they're in don't actually have Uber as an option. And when you look at their earnings per share and free cash flow, it's clear that they're on the cusp of passing through this break-even point into overall positive free cash flow and profitability on an ongoing basis. This is what I think of as sort of an inflection point for a lot of these tech companies that maybe don't have the longest track record of profitability. Now, this isn't to say that it's a sure thing, but it's starting to look better and better as time goes on. I think if you combine the fact that they're no longer really burning cash with their very cash rich and low debt balance sheet, you get a compelling combination of financial strength and primed growth that will have probably an outsized amount of that future revenue growth going towards the bottom line, since they're pretty much past that inflection point where they can cover their SG&A and everything, their overhead and whatnot. So more and more of that revenue that they add is simply going to go towards free cash flow and net income. This is what I think the perfect golden opportunity to get into a stock when it's beaten down massively, even though financially they're about to round a very important corner. You can actually see the financial discipline in their financial statements. If you look at their SG&A expenses, for example, look at how flat they are over the last, say, 7 or 8 quarters. Yet revenue continues to climb. You see similar things when you look at their research and development expenses, also not ballooning, as well as when you look at something really critical like their operating expenses. It seems like they just managed to keep things very much under control in terms of cost. And if you keep your SG&A, your R&D, and your operating expenses under control, yet still increase revenue, it stands to reason that you could have margin expansion. And they do, in fact, have margin expansion. And their operating margins as well as profit margins are also trending in a positive direction. This is, of course, a great sign for a company with growing revenue. It means almost definitely that it will translate to bottom line. Grab is also an emerging markets opportunity. They operate in Singapore, Malaysia, Cambodia, Indonesia, Myanmar, the Philippines, Thailand, and Vietnam. Now, you may be thinking, oh, well, a lot of those countries sound poor. So where's the opportunity? Well, this is interesting, okay? So when you look at something like their per capita GDP growth, you'll see what I mean. So here's a chart of the per capita GDP for Indonesia, Vietnam, and the Philippines as far back as 1960 up to about the year 2021. I want you to look at what happens to these lines after the year 2000. Now, it's clear that the average person is still quite poor in these countries, but look what happens when you add Malaysia. Look at what happens to that. This is not too terribly far off from the per capita GDP that you might see in a country like, say, China, who is known for having the fastest growing middle class in the world. So my argument is basically what you have here is access to markets that have that similar per capita GDP growth trajectory as China, but without that China risk that people are always talking about, that geopolitical risk. And also, the country where Grab is headquartered, Singapore, has an extremely developed and advanced economy by Western standards, with their per capita GDP being pretty much in line with what we have here in the U.S. It's a little over $70K per person, from my understanding. So, very much headquartered in an advanced economy. So while they're headquartered and operate in one of the more advanced economies in the world, they are also operating heavily in the emerging economies in the world and stand to benefit hugely from both the per capita growth and the good demographics in those economies. Because, well, let's face it, countries like the Philippines never had a one-child policy like China had that ruined their demographics, and that creates an issue a few decades down the line. These markets have sort of the best of both worlds from that respect. And I think the analysts do come in correct on their consensus of a strong buy on this. Obviously, otherwise, why would I be buying it? However, this is a conclusion I reached before checking what the analysts thought. So, if anything, it just maybe slightly confirms that I'm at least sane. Based on the revenue growth and margin expansion we're seeing, they're projecting about 16 cents EPS in 2026. I think that's quite realistic for what Grab has been able to do so far with their revenue growth and margin expansion. Although it looks like analysts think revenue growth is going to slow down quite a lot after 2026. That doesn't worry me too much, but it does look like the EPS will grow at a much faster rate. For the moment, my personal position on Grab is that I will be adding it under about the $4 mark, and I'm basing this off of the 16 cents in earnings per share they're expecting in 2026. I'm patient enough to wait for that to pan out, and I am giving it a 15% discount rate because I want extra juice for my squeeze for waiting for this to play out. And the 15% growth that I'm assuming is actually, well, largely front-loaded in the analyst estimates. They think that in 2027 it'll grow over 60% and then over 30% the next year. I don't know exactly how that will play out year to year, but I think 15% EPS growth is probably doable, with it dropping slowly into the single digits as time goes on. Although the further you get in the future, the harder it is to predict with any degree of accuracy. And this price it is trading at today leaves me a lot of margin of safety to be wrong and maybe overestimating them a little bit and still do well. However, I think it's equally likely that we're underestimating what Grab can do, as this is something that's in emerging markets higher than normal per capita GDP growth, and a lot of potential that we may not be realizing with what looks like a financially disciplined management team. I'm definitely going to need to get into some earnings calls and really keep a close eye on this one and adjust my predictions going forward. But let me know if you like this stock in the comments. Subscribe to the channel if you want more videos on stocks like this. Make sure you like the video for the algorithm and all that. Follow me on Discord, link in the description. And join my Twitter at Mr. Macho Mog, link in the description there as well. Always appreciate you. Take care, everybody, and hope to see you again soon.